to be speaking about the checklist that I use. This checklist is something that I've been working on for a while, but finally completed about a few months ago. Now I've been testing it, and this is the scouting checklist for Pips Matter. It's mine. I've created it. I'm using it, and it's really powerful. It's basically a 5-step basic process. But before we go into that 5-step process, I'm going to explain to you a couple of basic things here. Now, we want to be on the winner's side. The winners in the financial markets are small. We've been a part of the losers many times. And to stay on the winner's side, we need to have 3 main components. The first one is, of course, psychological. The second is system. And the third one is controlling. It falls under the psychological side, but it's having discipline and controlling the emotional side. I'm going to go into that into another session, but what I'm going to go over could actually help out with all of those. Now, one of the main missions we have as traders is, of course, consistency, both in work and routines and returns. Now, what I mean by work, consistency. Once we apply, let's say, a scouting checklist that says, locate a pattern, do this, then do this, then do that, then do this, and then, and only then, if everything is okay, you get into a trade, then perfect. Now, if we are consistent in this approach, eventually it becomes a habit. You don't have to review it every time. You do it automatically, but that takes months. The return side is a side effect of that. So what I'm about to go over is just as important as anything else in the market, such as systems, psychology, and blah, blah, blah. The purpose of this is to have an organized, systematic, step-by-step approach to our trading. And this is necessary to actually accumulating wealth as a trader. Now, if you want to make it as a trader, you just need to follow the basic steps I'm about to explain in this mini tutorial. But this is actually only going to be helping with actual trade execution and analysis. The system and everything else, even though simple, takes a bit of time to understand. Now, 2 basic points before we move on. The first one is I scout the markets every 4-hour candle. Now, living in Cyprus, the markets open up at midnight for me, which is ideal. That means that the next 4-hour candle is at 4 a.m., then the next one is at 8 a.m., then at 12 p.m., then at 4 p.m., and finally 8 p.m., and then we continue again. So I do this because it actually helps a lot. It's a really good procedure to follow. It helps in discipline. It helps me not jump into trades too quickly. But moving down to the 1-hour chart, which I'm going to explain here, is actually just as important. Now, before executing a trade, I would actually highly recommend to wait for the 1-hour candle to finish. Kind of have an idea of where you think it might finish, such as the GDP trade we were speaking about in the community not long ago. I'm going to go over that trade and show you the pin bar that was created within a contraction. Anyway, I scout the markets every 4 hours. I do this because it helps me identify patterns and also not rush to trade. So if I start scouting the markets at 8 a.m. and I find nothing, I know that I'm going to be scouting it again at 12 p.m. Now, if I miss that scout, I go on to 4 p.m. I don't start scouting at 1, at 2, at 3, I go at 4. So every 4-hour candle, that's where the best patterns are made. But 1 hour is also okay to spot any day trading opportunities. Anyhow, we're going to be moving into this now. Now, the simpler you make it, the better it will be. It takes time to create simplicity because in the beginning, everything is complicated. Now, this checklist / procedure is something you build into a habit, but it's worth every single second. Now, one of the most important things in trading, for me at least, is structure. When I'm organized, I do very well. And this checklist is my little gym. Now, I'm going to give you a very small lesson over here. So if you follow football or basketball or tennis or any kind of sport, and I'm just going to use sport as an analogy, I'm not even going to go into business. I will tap into it for a second, and I'll start with that. The best CEOs in the world didn't just fall on top of their company, or the best entrepreneurs in the world didn't just fall on top and create this amazing app or amazing service or amazing company. It took time, it took learning, it took practice, it took failure to create that. But the little gym that I'm speaking about is the books they've read, the lessons they've learned, the practices, the analysis they've done of their competition, and so forth and so forth that made them smart, good, excellent, great, the best at what they do. Now, moving on into football, I just love to use the Ronaldo explanation here, Cristiano Ronaldo explanation, which is not when he signed, but Gareth Bale signed to Real Madrid, he wanted to surprise his coach so much that he came 2 hours early to training. Even though Ronaldo was one of the best players in the world then, when Bale came to the training, he found Ronaldo training there long before he even came. Even though he's the best, he kept training. So what I mean by gym here is every time we get on the charts, it's not for the purpose of opening a trade. The trades come to us. We do not come to the trades. But by doing proper analysis and understanding the markets on and on and on, it helps us basically. It's basically our training. So that's how I take this. So I train 4 times a day. I sit down, I analyze the markets, I check, and I improve. And my eye gets sharper, my hesitation gets slower. I become better at what I'm doing. So yeah, that's what I'm trying to explain here. Now, we gotta make sure that we spend as much time as possible reviewing before we enter. But we don't want to overdo it with reviewing. There was this one person that I used to coach a while ago, and the biggest problem this person had was that he was just checking the charts for way too long, and he developed the fear of opening a trade, the fear of being wrong constantly. And whenever he would enter a trade, it would either be way too late after the breakout has already happened a long time ago. And that's all because he was spending far too much time on hesitating before opening the trade. And that's because he was analyzing the markets far too much. Now we're going to pop into my checklist here. At Pips Matter, we now only trade one pattern, and that is the contraction. So the first thing we do is we locate a contraction. Once we locate a contraction, now this contraction cannot be longer than 10 days, by the way. I'm going to show you what I mean by this. The next thing we do is we review the key trading levels. This is actually a really simple procedure, and I'm going to show it to you live. The third thing we do is we check the indicators. Now, the indicators are RSI, the Dow Chain Channel, the middle of it, and an EMA. Now, the RSI is set to 13, the EMA is set to 13, and the Dow Chain Channel is set to 30. We want to check both 4 hour and daily. We could even go down to the 1 hour just to see what's going on, especially for RSI, to see if it's overbought or oversold. That might help us with our decision making and understand if it is the end of a contraction. But we can never be 100% sure. You need to remember that. There are no 100% trades. We need to approach every single trade as a totally unique encounter that we've never approached before. I'll go into that later on. Now, once we're done checking the indicators, we want to be moving to the candlestick patterns and checking for the 3x pattern. The 3x pattern is 3 higher highs, 3 higher lows, 3 lower lows, 3 lower highs connected with a trend line and reaching it in a frequent basis. So candlesticks that we use, I'm going to be going over in the course, and I'm going to make a little PDF actually about this too and give it out for free so people can see which candlesticks we use and when to better understand our system. Now the next one is we want to be checking as well the 30% fib retracement of the recent high and low. And that's going to be explained too. It's actually on the GBP trade. And then finally, we want to understand as well the fundamentals for the next 10 days. Because you might get stuck into a trade. Maybe it's just going to go up and down and move sideways, basically, until it moves either in one direction or another. Now, markets are moved by data, sentimental stuff such as Trump, and other things. They don't just move by themselves. Well, they do in a sense, but it takes a trader to move them. And the final thing that we need to do is understand the market theme. For example, what is the market theme of gold? Right now, it's the trade wars. 5 years ago, it was something else. In 5 years, it will be something else. So we need to understand the market theme. What could and what is driving the trend? What could create spikes aside from the fundamentals? So in reality, that's the basic idea. I'm going to go into this right now when we go straight into the charts. Now, the markets don't give you what you want, and this is a really important lesson that I want you guys to understand here, is that the markets will never give us what we want. They give us what we deserve, what we work for day in and day out. So what we're going to do now is we're going to go into the charts, and we're going to start with GBP USD, and I'm going to show you this little thing in action. So we got GBP USD here. We're looking at the 1 hour chart. I'm just going to show you the trade that we took here. This contraction is only spotted on the 1 hour. This one here is spotted on the 4 hour. We took a sell down, never reached the actual take profit here, but we did get out earlier. You can verify that in our community. Now, I'm going to show you what I mean by the 30% fib. So we're going to start the checklist one by one. The first thing is locate contraction. And there's the contraction. One sec. So here's the contraction. You can clearly see this contraction. I'm going to put a number 1 up here. The contraction is here. This is how the contraction works. It starts wide at the top and tightens at the bottom. The next thing that we want to do is review the key trading levels. So on the 1 hour chart, I mean, what you would see is generally, to me, these are key trading levels, this here. And clearly, of course, the high, which is this here. So these are the main trading levels. Then we have this level here, which lines up with the take profit of the sell. This is a minor key trading level. And then the next one would be the 100% level of this here, which lines up with this level here and the rest here. So now we have we have 4 key trading levels. 1, 2, 3, 4. These are supports and resistances. Because we're not trading with trends, we don't care where price is going to go in 200 pips. All we care about is the next 30, 50, 60, 100, maybe 150 pips. So we located the key trading levels. We now know that we are either getting out on the buy at the 100% or at this level here, but our take profit is set at 120, which also lines up with these shadows here. You can see them lining up well. So that's it for the key trading levels. The next thing we want to do is check RSI. RSI is down, coming down to the 30 level, which is perfect. Ending to the contraction, coming right to the 30 level. The EMA, we want to be checking on the 4 hour and the Dow chain channel on the 4 hour. What we see here is that the Dow chain channel is very far away from price, all the way down here. EMA has been broken, but if this candle, this 4 hour candle, which ends in 3 hours, goes up, the EMA is not broken because price closed at it here, and now it opened up here. So if this bounces up in the next 3 hours, the EMA remains as a hold. So in essence, this is still a very decent trade for the next 3 hours. And based on what we see on the 1 hour chart, we'll see that there are very good chances of price action going up. Now, the next thing we're going to do is we're going to review the candles. We have a nice little shadow here telling us that there is more rejection of price. Plenty of rejection of price. We're going to go to the 4 hour, and you see that even better here. More indecision to the downside. Price action came very close to this take profit here of the sell and moved up. There is no free X pattern from what I see. A free X pattern would be low, higher low, and then a highest low, for example, here. But there is none of that. But there is the next thing, which is the 30%. And what I'm going to do here is we have the low, we have the high. But we're not taking this high, we're taking the first high that price, the first high that price reached. So we're going to go top, and we're going to go bottom. And we see that 30% right there lines up with price action, the resistance support level that we're facing right now. There it is. And you can see a rejection of price. Now, a very important and essentially important trading lesson for my trading system is this. You can see what price action is doing. We have a high, so we have a low, we have a high. We have a higher low, we have a higher high. We have a higher low, and then we have a higher high. And now if this remains the low, which it seems to be, it will, the trend is up. In reality, this is a classic pattern. We have a contraction leading to the 30%. What we would be targeting is not the 120, we would be targeting the 161.8, which lines up with a retest of this contraction. But I'm targeting 120. I am exposed big, and 120 is more than enough for me. Next thing and final thing that we need to understand here is what are the news that are coming out. All you need to do is go Forex Factor or investing.com. Since we're trading GBP USD, you can see that the market can be moved by the following events. We have a speech tomorrow, 11 a.m. GMT. Then we have CB consumer confidence from the US and a few minor datas. Then, again, crude oil inventories cannot move the dollar. This probably will not move the pound. Moving on, preliminary quarterly GDP, USD, Thursday. So Wednesday is clear. And then Friday, we see more data. What I would do is go to the next week and check that as well, see what could move the market, and just have it marked down in my memory to understand that, hey, this is what could move price action. So I want to be either attentive to my chart at that moment. So, so I make sure that, you know what, either I capitalize on a bigger move, maybe compound my trade, maybe get out of it sooner if it starts dropping. And then you think of the market theme. What could be moving this here? We already know it's Brexit. Any comments based on Brexit, either from the EU or the UK, could move the pound. Next thing, we've got trade talks starting with the UK and the US. That could move the pound too, right? On the dollar side, well, Trump could, the Fed could, comments from the Fed, comments from Trump. Trump wants a weaker dollar. He stated it. He's having a war with the Fed. So maybe, just maybe, by the way, he might be sending a little tweet out because he seems to be done for now with China, and he might move his attention to the Fed. So that could weaken the dollar. So we understand the market theme. We saw the news. We checked out the pattern. Didn't take more than, 5-6 minutes. Generally, what I would do is I have a checklist of all the major pairs. So Euro USD, GBP USD, blah, blah, blah. Then I have all the Euro cross pairs. Then GBP cross pairs, then the down under cross pairs, which is AUD and NZD cross pairs, metals, oils, and then I go into indices. So I skip through these things real quick. And when I spot a contraction, I mark it down, continue going, mark it down, and then I start doing this little checklist. Normally, without speaking, it would take me much less to do this, what I've just done. And it works, it helps me with my decision making, but most important, it gives me clarity, because the last time we have complete control over our thinking and decision making, especially the thinking part, is before we enter a trade. Because as soon as we enter a trade, it's done. We're only looking for reasons to go up, Every level price action touches, oh, it should go up from here. And many people go bust that way. I have too. So clarity is very important, and understanding that, hey, if price action starts dropping here, first of all, this pattern would fail, right? So if this goes like this, this pattern is done, because then I'd have to draw it like this, and that's a channel, right? So that's the closing part of this. That's where we would get out of this trade. In reality, still looks really good, especially if this holds. If this 30% holds, we're in. If it starts closing down here, then we're out. We just have to be out. Yeah, so that's my checklist. Again, locate contraction. We don't want it to be longer than 10 days, by the way. So you can just use this date range thing here and just click here and go there, and you see it's 2 days. That's a contraction we want. And then you go on this one here and you check this starting from there to there, 5 days. You see, that's perfect. We do not want to go anything over 10 days. Those are a bit more complicated. And I explained them in a previous video, which you can find on our YouTube channel. It's, I believe, the last video I released. It explains quite a bit about how this all works. Anyway, that's pretty much it. This is how the checklist works. I am making a much better video about this. I just wanted to put this out and just share it with everyone from now, so they understand exactly what I do and how I analyze the markets. Yeah, that's pretty much it. It took me, 23 minutes to explain all of this, but this is exactly how it works. So I can go on some other pairs and show you this again, how we would do this. I'm going to go through a quick scan of the markets. We need to go to the 4-hour chart, and I'll start with, we just went on GBP USD, and I'll try and locate the contraction here. It is Monday. The markets did move quite a bit on Friday. So I doubt I'll find something because I've done my reviews already plenty of times. But it's always worth checking the markets. So I'm going to go through this real quick and see if there is anything. So this contraction here, we traded this last week, achieved profit a bit late, but I'm going to show you what I mean here. I'm just going to delete everything. Good educational lesson here. So we have a tiny contraction here. It didn't take too long to form. I think about 2 days, maybe 3 tops. So from here, from the bottom to there, 3 days to complete. Once it completed, it achieved its breakout, but it found resistance at 30%. The main reason I stayed in this trade is because we had a key support level right there. And price action couldn't break it. It came down, made a beautiful pin bar here. I got lots of hopes on this. Went up, went back down, third retest, boom, 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 and it continued going up. So, and you can see here, so you can even use this and clearly understand where you have possible supports, resistances. Now you can see the shadows here. They come all the way down here to the 30%. Price action couldn't break this. This support were too strong. It tried again here, couldn't break it, went back down. Then again, it stagnated here, and that's the shot out, and that's where we made our profits. It didn't take too long to achieve profit. So even if you bought it down here, it would take you 7 days to reach take profit. It's not too long. It is a bit long, but not too long. Especially if this level was holding here, that was just perfect. So yeah, that's another explanation for you. I've got nothing else to go over right now. I don't want to go into the charts because I've got this trade running here and I don't want to expose myself more. I want to start the day fresh tomorrow if I get out of this tonight. If you got any questions, feel free to ask them. If not, then just shoot me an email at Denis with one N, DENIS, at pipsmatter.com, or just head over to our website, which is pipsmatter.com, and you can contact us there too. You have any questions?